from a legal perspective. It's still very, very early days in that regard. But I'm excited to share some of the findings of like how we've been thinking about approaching this topic. And then also specifically, we're going to look into a little bit how we are going to approach the markets that we're going to have in Molecule in our alpha, and then also consecutively in our beta. And then Tyler later on is also going to kind of talk about our alpha launch a little bit, which we're doing relatively soon already, which we're really, really excited to share with you. Yeah, cool. Let me get started. And feel free to ask questions in the chat, jump in at any point. I want to ask, maybe just before we kick it off, who on this call is not very familiar with the concept of bonding curves? Cool. So I'm assuming everyone is. I don't think anything came in the chat. Not me. Okay. Zanka's familiar. Cool. I had some intro slides on bonding curves because I didn't know. Sometimes we have like outside researchers that we're currently working with, like join the calls as well. But it seems everyone is pretty familiar. So I'm not going to jump through this again. I think maybe maybe a brief recap, really, from a functional perspective. So a bonding curve is effectively a smart contract that accepts funds in exchange for minting new tokens of its denomination. It holds those funds in a reserve. That's the bond or collateral. The users can then exchange or trade funds for tokens and vice versa. And the trading price is determined by a pricing algorithm, which is the curve. Very commonly, this kind of looks like this. And I'm assuming, because you all know those, there's very different functions to bonding curve designs. So that's kind of, this is really like the most basic design that we can imagine. But what a lot of people have started doing now is playing with all kinds of flavors with these designs, because essentially a bonding curve is nothing but a program. It's a smart contract that we can start playing with in all sorts of ways. Cool. But so what does a bonding curve mean legally? I first want to look at a little bit how a bonding curve is very different from the current existing models that we have around issuing any kind of token or coupon or share or security. So what a bonding curve really does is it provides immediate liquidity by creating a primary public market maker to issue, buy, and sell tokens. So we have a primary market. Like normally we talk about secondary markets once something is, for example, trading on an exchange. In this case, the bonding curve is the primary issue and the exchange. So it's two things in one side. Then next, it enables trustless price discovery and funding models in highly illiquid or small markets, which is really interesting for things where it was previously impossible to create markets for. There is no central issuing authority. There is no secondary market making, I already said that, and there's no underwriting. So underwriting is typically if you're selling shares, for example, on the stock market, or I think even in a token sale, for example, you always have an underwriter that basically takes on the risk if the offering doesn't fill. With a bonding curve, we don't really have any of these. And so I've really been asking myself, and I chatted to like different lawyers in the space, chatted to Billy Rennekamp, Slava, a lot of other people working with these designs, and no one really seems to know what bonding curves are. I had different interpretations come in from lawyers. It really depends on the underlying asset, which we'll get to just now. But we found one definition that was kind of simple, which is it'll sound silly as well, it's a market maker. But the cool thing about market makers is that you actually have official definitions for what a market maker is that is provided by law. Like there's a definition of what it does and what it can do, which is really interesting. But now we can kind of compare what a market maker does in our current financial system, and we can compare what it does in kind of our bonding curve system. And I'm kind of approaching this more general, and then we'll get into like the molecule lens later on. So approaching it generally from like what are the different things we can do with this. So what is a market maker? A market maker or liquidity provider is a company or an individual that quotes both a buy and a sell price in a financial instrument or commodity held in inventory, hoping to make a profit on the bid-off spread or turn. So that's the kind of official, it's from Investopedia, but it's like an official definition. I've added a second definition in, which is like from a similar thing, a similar article. A market maker is a dealer in securities or other assets who undertakes to buy or sell at specified prices at all times. And you can see here what I'm trying to do is I'm trying to highlight in which cases this actually is the definition of a bonding curve, in which it's not. Because a market maker is an officially recognized kind of vehicle or like instrument by law. So the first sentence is basically everything is correct. So a dealer in securities or other assets who undertakes to buy or sell at specified prices at all times. So that's pretty much exactly what a bonding curve does. It's not necessarily a dealer in securities, but it can be, or other assets, but under a bonding curve, we can say undertakes to buy or sell at specified prices at all times. Okay, check. It also, I mean, there's a lot more that it does, but this is just, let's see if we find a definition in our current legal system. The second one is much more detailed. So a market maker or liquidity provider is a company or an individual. So first of all, that is now not the case. Because smart contracts and bonding curves by design are like permissionless programs that we put on a distributed ledger, they are neither a company nor are they an individual. We could say they are created by a company or they can be created by an individual, but the market maker itself in this case is not an entity. First, really important thing, because that also kind of later on goes into like the whole ideology behind DAOs. So bonding curves and DAOs are not that different to some extent. For anyone who doesn't know what a DAO is, it's a decentralized autonomous organization. And so, okay, so next sentence, we'll just go through this, it won't take too long. A market maker quotes both a buy and a sell price. So cool, that is correct again, that's the same as we had up here. In a financial instrument or commodity. So I think the definition of what bonding curves can issue and sell are much wider. I think in many cases they can issue a membership. You could have, you could do concert tickets by a bonding curve, which is definitely not a financial instrument or a commodity. So very quickly, if we start looking at use cases later on, like it's very much not, it doesn't have to be in any way financial instruments or commodities. Again, it's true that they're held in inventory. So a bonding curve kind of keeps this reserve both of its underlying tokens as well as it mints those tokens as well as it's the funding that's put in. And then the last thing is interesting as well, hoping to make a profit. So the bonding curve doesn't need to make any profits, which is kind of cool. I mean, this goes back to like the whole notion of like, if we had decentralized exchanges, we could have zero exchange fees for trading on those exchanges. A bonding curve doesn't actually take a fee, which is cool. The underlying network that the bonding curve sits on might take a fee. Yeah, I'm actually surprised that I mean, I guess it's counterintuitive, but no one's built bonding curves that take a fee just for the sake of taking a fee. Cool, so this is kind of an existing definitions. And you see that many of these, let's say if these were like checkboxes, like quite a few of them are not met. So, but this quotes both a buy and a sell price and held in inventory. So the next real question is, so it's probably a market maker, but from a legal perspective, it only really matters depending what the market is made for. So then I guess the biggest question around the use of a bonding curve lies in the underlying token and what the economic function of the token is that it issues. I want to get back to maybe just one point before we close. There is a lot more nuances to these individual things. So for example, if we create a bonding curve for a security, wait, I'll just go back. So let's assume, for example, we created a bonding curve that represented, I don't know, shares in a company. So we're selling equity through this bonding curve. There's a project called Continuous Organizations, or Fairment, that's working on exactly that. And so one problem that you have with using a bonding curve to sell securities is with a bonding curve, you have immediate liquidity. With any regulation, any securities regulation in the US basically will tell you that any shares that you sell need to be locked for trading for a minimum amount of time. It can be 3 months, it can be up to a year. And during that time, those shares are not allowed to move. So no one's allowed to buy or sell. So in that sense already, bonding curves by their design violate a lot of those regulations because you would have to lock the trading of tokens. However, it's in such a gray area that like two of the lawyers that I spoke to weren't really sure, because the bonding curve is a primary issuer And the law in the United States, for example, says that only if you have you only can't sell your shares to counterparties. So essentially, you can consider the bonding curve as almost being like a primary issuer that like buys back if you want to buy back. But so you can trade with the bonding curve, but you can't trade with your buddy or with anyone else. And so maybe that could present a big loophole in securities law and actually make bonding curves very, very attractive for security token offerings. Yeah, there's another little loophole, and then I'll stop. There's another little loophole that says if you there's a specific regulation called Regulation C, and in Regulation C, you can only you need a predetermined pricing algorithm or like a predetermined like pricing structure for any kind of sale of these assets, and then you can do it relatively freely. And a bonding curve does exactly that. So the law can kind of go on towards both sides. So there's a lot of nuances of what all of these individual things mean in different jurisdictions. But the primary, I think the primary aspect of it is what these different tokens can represent. And there, I think bonding curves don't reinvent the wheel in terms of what we can tokenize. But what they do provide is the tokenization of a lot more things. So it becomes a lot more attractive to tokenize different things. So what can these tokens represent? It could be a donation or a show of support. We'll get into that a little bit later, which is then e.g. like Kickstarter-like funding models. So Kickstarter on a bonding curve. One possibility is very lowly regulated because it tends to be small amounts, and there is no fundamental exchange of value. It could be payments for services, and then you're in contract law. So the same way if you go into a shop and purchase something, that's contract law. You enter into like a sales contract, and there's value-added tax that you pay on top of that. You could have sales contracts with bonding curves, for example. You could buy concert tickets of a bonding curve, different license agreements, which could be really interesting in software, service level agreements. There was a couple of people recently that started selling service tokens on Uniswap. For those that don't know, Uniswap is like a decentralized exchange. It uses a not dissimilar mechanism to a bonding curve, where people essentially said, if you buy these tokens, you get access to 1 hour of consulting time from me. So essentially things like that. The other is utility access, which could be membership in an organization. In the same way that if I contribute to being in my local tennis club, I'm a member of that tennis club, it'll cost me a monthly fee of, I don't know, $30. In the same way, we could structure membership models like that. We can structure access rights to data. So Ocean Protocol, for example, is working exactly on this. I think access rights is still a little bit in a gray area, whether it's a right that might be in the right to an asset, which then brings it into securities law. And then lastly, we're in assets, which is normally securities. So securities could be shares in real estate, like in a house. It could be stocks, kind of all the securities that we know. And then what we're specifically looking at is intellectual property, looking at for a while, and what that would mean if you tokenize that. And there you would essentially go into tokenizing royalty streams or outright creating a special purpose vehicle that holds that intellectual property and then tokenizing that vehicle. And I think then we're still at the very beginning of actually figuring out what we could do with these new market designs. A lot of them are in legal gray area. It depends how you market them, a lot of the times in the US. But I think specifically around consumer goods, around utility access, as well as about securities, we're going to see really interesting developments. Cool. Just kind of as a last point, kind of what we're aiming to have classified in our alpha launch. So we kind of decided we wanted to really push towards a launch much sooner. And so in our alpha launch, the tokens in a research project, and Tyler's going to get to that just now, will most likely represent donations. And those donations can be withdrawn or exchanged, kind of traded back with the curve. The legal requirements of those are like the simplest. The goal in that alpha for us is really to test the technology and the incentive scheme behind the bonding curves, and to provide a common funding model for basic research. We're also thinking about taking it one step further, where tokens would represent almost like a first right to future intellectual property that is developed from a basic research project's research data. So you could, for example, say, if something comes out of this, then you will have the right, like a discount right, in to participate first, or to get in a discount at like a future fundraise. So those would all be kind of like payment discount methods. Yeah, and so without further ado, do you guys have any questions? Oh, one disclaimer that I want to make. I'm not a lawyer, and like I'm going to be writing an article on this. I didn't want to make it like too deep, as a lot of the nuances, like creating revenue models or taxation models within curves, require like a deep understanding of how the bonding curves work in the first place. But I'm writing an article on this that should be coming out next week, and that is going to go into like a lot of the nuances of like different models and what they could mean legally. Yeah. Does anyone have any questions?
Yeah, can you? Oh, sorry.
Oh no, go ahead, please. Okay.
Can you go back to the slide that shows like what it represents? So you basically say I invest in research projects through a donation, and then at some point the donation changes into some rights to like buy into IP early on or something like that, right?
Yeah, I'm actually going to get into that quite a bit.
Okay, good.
Yeah, if that's okay.
Yeah.
I think I could sort of explain with some.
Yeah. So Tyler's going to go into that. So basically, that would be. We're still looking at the mechanism, but it would be almost like contract law. So currently, how some of it works is like, let's say I'm a commercial entity that is funding. Just hold on for a moment, Tyler.
Oh, sorry.
If you're like a commercial entity that is funding a research project at a university, then often in those commercial agreements, you would almost have a clause that says, we're funding this basic research project. Let's say here are 200,000 euros. This sounds like interesting research. If something comes out of that, we own 50% of it, for example, and we have first rights to further invest in it or do something with it. So agreements like that exist today. And so basically what we're trying to do here is to say, can we make a contractual agreement between all of these different parties, if something great came out of it, that you could then further invest, but also had the first right to participate. Yeah.
Okay. So these things exist today.
Yeah.
And they are not abused to, or they. I mean, it depends a lot on how much the right is value, or how much you transfer it to, like. This can be an arbitrary decision, right? You can, if there is a company coming out of this, it could mean you get like a right to like get 50% for a certain amount, or so it's basically arbitrary. Yeah, at some point you can basically say this first donation represents or could be a right to like buy to a much cheaper price, like 10% of the company.
Rights to use data, even
but it's sort of arbitrary, right? There's like the researchers or
the market creator or the researcher could decide that, for example. They would be able to,
Okay. Yeah, I mean, the value of a research project is sort of like the future value is sort of not foreseeable. So it's arbitrary. So this is like, in any way, it will be arbitrary, right? Yeah. So,
Yeah, go ahead.
So then it comes up like, let's see, okay, if you did in the past, you did like, you distributed the rights to like buy into a future company or a future asset in a nice way. People can assume that you will do the same in the future, right? So it's like kind of a reputation also involved here.
Yeah.
Yeah.
I mean, to some extent, I mean, we've been trying to come up with smart ways to implement these things with low overhead. I think in some cases, specifically if it actually comes to a discovery, then it gets more complex. From like, you would need to like move out the IP, or the IP would need to go to a specific entity. But yeah.
Okay, I see.
Tyler,
cool.
we can also still go for like questions at the end. Yeah.
Awesome, guys. Thanks so much to everyone for joining us today. I really appreciate you guys taking the time. Paul actually touched on a little bit of what I'm going to be talking about today. Just bear with me for 1 second. Yeah, so as many of you know, the sort of core goals for Molecule in the long run are to really distribute research, development, and funding of chemical intellectual property. And we have been sort of working towards this long-term goal of creating open markets for fractionalized pharmaceutical IP at various stages of development for almost a year now. And like Paul mentioned in his talk, a lot of this work has to do with identifying sort of the appropriate cross-jurisdictional legal frameworks to support that work and allow those markets to be created in sort of a low friction way where anyone can buy in and out of them. And in supporting that, we've developed a really versatile tech stack that can be applied to many different use cases. And as Paul pointed out, one of the really interesting use cases for token bonding curves potentially is fundraising. So to support sort of our long-term vision, but also try to, I guess, test the technology in the short term and get people excited about what we're doing and have them interact with this sort of system that we're designing. We're moving towards the launch of the alpha iteration of the platform this September. And our primary goal is really to develop the versatility of token bonding curves for this fundraising use case. And yeah, so I'm really happy to present you with Molecule Catalyst, which is it's sort of the alpha iteration of our platform. And this is a new scientific crowdfunding platform specifically for promising early stage research. Just to be clear, it's what I think the easiest way to think about this would be like Molecule as you know it, but without an asset at the center of these markets. So really, in this case, you would be, in a sense, donating to a research project. But there's a lot of really interesting things we could do with that to sort of incentivize donations in a way that benefits both researchers and ultimately the people who are donating as well. So I think a good place to start would be to sort of explain why we're going this route and really around some of the limitations of traditional funding sources. So if you're someone who's been in academia before, presumably you've, or at least working as a researcher, you've probably been exposed to the sort of hyper-competitive grant environment as it exists today. Writing grants can consume a huge portion of an active PhD or primary investigator's time. It's labor-intensive, highly competitive, and also in some cases conducive to a loss of autonomy, just meaning that some grants come with strings attached in terms of how you can design experiments, what they're looking to get out of them. It's largely, your ability to secure them is largely dependent on your previous work, your publication history, your reputation, for example. And ultimately, this means that seasoned academics with a proven track record are ultimately, I guess, the applicants that are securing grants. Young PhDs and students can secure grants, but it's often a lot more difficult for them to secure independent funding compared to someone who has a proven track record. Often there's a bit of a conservative risk appetite, so there's not always, let's say, grants to support unconventional initiatives. There's obviously variable risk appetites depending on the source of the grant and what it's supporting, but it can be more difficult to secure funding for higher risk projects that break convention. And the timelines for securing grants are often difficult to deal with. Sometimes for NIH grants, for example, it can be 6 months to a year from the time that a grant application is submitted for funds to be secured and dispersed. And so in response to that, what are some of the benefits of crowdfunding? So in the context of the sciences, it might be a suitable way for young academics and student researchers without really extensive publishing histories to be able to secure funding, and particularly small to medium amounts of capital relative to, let's say, $1 million grant or something like that. The capital requirements for fundraising with crowdfunding, even, for example, I think Reg CF is the piece of regulation in the US that says that you wouldn't need to be, let's say, like a KYC investor. I think it's up to $1 million max. Capital can be secured and distributed more quickly and with less strings attached, which is quite nice, because this means in many cases that researchers have a bit more autonomy with regards to the work that they want to carry out and with respect to experimental design. And this also means quicker timelines. So hopefully that accelerates research. The public involvement aspect is really important. Crowdfunding represents this sort of democratization of research. Currently, there's a lot of tax dollars that flow into research, and the public actually has very little say in terms of what that money is used for. So in this case, the public can help identify projects that really resonate with their interests and support those initiatives directly. And just to my last point, this goes back to sort of supporting unconventional initiatives. So crowdfunding can be a really appropriate way to support work in unconventional areas of research where traditional funding might fall short. That said, like crowdfunding for science has and is being tried. There's been some problems with some models that exist. One interesting, I guess, success story is experiment.com, which is particularly good for the raise amounts are typically around $5,000, mostly student projects, mostly, I mean, not necessarily low impact projects, but yeah, the sort of projects that could be could be difficult to raise a small amount of money for, and they've had some success, albeit limited and with some difficulties, which I'll sort of explain now. But a lot of the issues come down to factors like trust. So how do projects ultimately that are looking for funding build trust with their backers? Keeping realistic targets and deadlines. So, I mean, and this is a problem I think is intrinsic to the sciences and experimental design, but we don't always know how long experiments are going to take. We don't always know if our hypotheses are going to be correct and if experiments are going to work. So often I think there's been some difficulties with when you have, let's say, an entire project that you're scoping out with a budget, being able to say, we're going to do X and Y and deliver on that within a reasonable time frame. Building interest. So we actually had conversations with the founder of experiment.com, and one thing that she said was that, in her case, on Experiment, really the researchers are the primary individuals that are pushing for funding. They're the ones who are trying to get people to commit funds through this crowdfunding platform, and the onus is really on them. So part of our thinking in this as well is like, if that's the case, are there incentives that we can create, or even by using novel crypto economic schemes, are there certain ways that we can incentivize people to behave certain ways, which I'll get to in a minute. Yeah, so really it traditionally relies on altruism. There's beyond the altruistic, I want to implement change, I want to see X or Y done. There's not necessarily incentives for people to donate. So how does Catalyst sort of address these core issues that are intrinsic to crowdfunding for science? Part of it is around these novel incentive schemes, around token bonding curves, some of which Paul pointed out. And this can shift the sort of promotional aspect that I was just talking about before to the supporter side. And this could ultimately reduce effort for researchers and increase success rates significantly. One way to think about this, just going back to Paul's previous example, if the token, in this case, represents just a donation. So let's say I see a project that launches, I think this is really cool and I want to fund it, and no one has funded these yet. So I commit X amount of money, I receive X amount of tokens, and at this point I'm the first person to buy in. So now the price along that curve increases, and this person that wants to donate gives X amount. Now the value of my token has increased. And the way that we're looking at this is when a donation is given, a certain tax, so a development, or in this case, a tax goes to the researcher directly. And as you know, with token bonding curves, there's a portion of that is kept as liquidity. So if I, let's say, identify a project early on and invest, and people invest after me, you could, for example, sell that token back to the curve and even make a profit on a donation. This is something that we're sort of experimenting with right now and just beginning to look at. But it could be, there could be, essentially token bonding curves could be used as these really interesting incentives to bootstrap projects or get in early funding before interest really starts to accumulate. And we're also looking at how do we incentivize people. to hold those tokens, for example? Could they be exchanged for a reward in the end or something like that? We're looking at continuous fundraising with vesting schedules that sort of are conducive to trust building while a campaign is ongoing. And this incentivizes really fast feedback loops between researchers and backers, pushing researchers ultimately to fulfill milestones and update backers as soon as possible. And this sort of aspect of increased engagement from backers provided by an open market where incentive pool contributions might increase in value, which I'll go into a bit more detail on in just a second. So just to give you an idea how this might be structured, this is sort of, and this is one of the innovations that is quite new in the scientific crowdfunding space. So trying to set up campaigns in a way that really mimics how science is actually conducted. And I'll just run you through this relatively quickly. So the researcher would ultimately define some detailed short-term milestones, the budget that would be needed, and what sort of deliverables would be expected after successful execution of those experiments. The campaign durations are fixed, and they take place before the actual experimentation. So there's sort of a time limit on how long you have to fundraise, and this also acts as a delay buffer for later research phases. And the funds are released to the creator when funding goals are reached within this defined period. Otherwise, the contributions are returned to the initial contributor. And in this case, the TC, this represents here, this is time. So this is the initial period. The red box is the period over which you're fundraising. The blue period is the period over which you're conducting experiments. And M represents a milestone. So this would be, for example, making your data available to your backers so as you could begin another subsequent fundraising round for another group of experiments. And just to show you what this sort of looks like, you would have, after a period of fundraising, you reach your funding goal 1. This is released to the researcher or creator. They conduct a series of experiments. Let's say it's going to be developing a mouse model, for example, to test a new drug in. They would then release these results, and once they've released those results, they can begin fundraising for the next phase, which might be to, let's say, administer a drug in that mouse model and look at the result. And this could happen sequentially for any number of phases, and as so long as the researchers are meeting these milestones, they would be able to fundraise again for subsequent experiments. And there's obviously a lot of different ways that this could go. And there's a lot of different flavors of bonding curves that you can use to sort of incentivize donation or mitigate risk, depending on where the campaign is at. And so this is the other component that's interesting, and this is where we're sort of experimenting at the moment. So when the final funding goal has been reached, token minting is stopped, burning is disabled. And what incentivizes late-stage contributors to sort of fund these campaigns, or rather what incentivizes people who have already funded these campaigns to hold on to their tokens? So that collateral that's been kept into the curve, we're looking at different sort of incentive schemes to sort of promote different types of behavior, depending on what's desired. You can have sort of an altruistic approach where the cell curve collateral is distributed proportionally to funders in that market based on the buy-in price and supply. You could have reward schemes where people can ultimately exchange that token for some sort of reward. This might look more similar to what like Kickstarter does, for example, with certain types of like, buy a movie t-shirt sort of thing. Obviously you could create really interesting things with that. Paul mentioned this briefly, a legal right. So it could be something, one thing he was talking about is like rights to future IP that is generated out of these projects. But another thing that you could do is data licensing rights, although this would require, requires some ability to trade these, let's say after the funding campaign closes, or you can have, which could be really interesting, like a gamified sort of incentive. So you distribute the cell curve collateral in a probabilistic way. The tokens are sort of a lottery ticket, and somebody could win some portion of that, or while another portion goes to the researcher. And I think what's really interesting is that when we launch this platform, sort of being able to experiment with different flavors of this and try to see how people respond to it. It's a bit of an experimental way, and hopefully we can come up with sort of the best incentive schemes to promote donation or promote giving to interesting research projects. Sorry, one second. Okay. Yeah, and so we are launching in mid to end September. We've been chatting to a bunch of really cool projects that I'm really excited. I can't share the names of those projects yet, but it's really exciting. Yeah, there's going to be. We're sort of looking at projects that are primarily looking to raise between, let's say, $20,000 and $100,000 to carry out work in the following research areas, which we care a lot about and sort of fit into our long-term vision with Molecule as well, which is rare, neglected, and pediatric illness, antimicrobial resistance, aging and longevity, and psychedelic studies. And so these are areas that sort of fit our core mission with Molecule and also that we believe in. And they're also areas of translational or clinical research that have traditionally been difficult to fund or have struggled in some cases with traditional grant approaches, or where commercialization, for example, has been difficult in the long run. Yeah, and I think that's it for me. Any questions?
Hi, Tyler. That's wonderful. Thank you so much for your presentations, and to you, Paul. So we actually have one question that came through in the chat, and it's how much have you received in donations so far? So I don't know, Tyler, if you or Paul want to take this one.
Yeah, so these markets are not live yet. We're currently in the process of onboarding projects. We're working to identify we're getting about 20 to 30 applications from projects that we're actually reaching out to, things that we're particularly interested in, and then ultimately choosing for our alpha probably 3 to 5 really promising research projects. So at this point, those projects haven't accepted any money from anyone because they're not live yet, but they will be live at the point of our launch in September.
Thanks so much, Tyler. There's also one comment in here that's from Sunka. It's not really a question, but he says he also believes that it incentivizes researchers to be more open and be open promptly. And I think you said this in other words. He says, yeah.
Yeah, exactly. So the idea is that, by structuring campaigns in this way, where there's, you need to have good experimental planning, you need to be able to show, even if it's a negative result, just show that the experiments were carried out. But I think this works to build trust, and it also sort of incentivizes fast feedback loops between the backers of these projects and the researcher themselves. And I think that's part of what this is about, right? Ultimately, we're talking about the democratization of science. People, there's many things that I care about that I would be really interested in working with a project or funding in a certain way, particularly if I felt that, it's sort of feeling like you have a say in that project or you have a part of it. So I think that's really cool. And I think more people would care about basic research, clinical research, et cetera, if there were ways for them to feel more involved with it and not so removed from it necessarily.
Yeah, and the circle between publication and funding becomes faster, quicker. You don't have to wait for a publication and then write a big grant application. So you are more closely related to the projects, and the circles become much smaller. Yeah.
Yeah, exactly. Paul, do you have anything to add to that, just in relation to our alpha, that I didn't necessarily cover?
No, I think you covered everything. I think someone asked about donations. I think the topic of so we've thought a lot about different legal structures which we can issue through bonding curves and what they can represent. I personally think one of the most interesting models is potentially to sell access to the data that is produced in a given research project, which almost goes along the same lines of selling future participatory rights in something that is produced. From a legal perspective, we're in a complete gray area. It's definitely not in securities law, it's in contract law, but very quickly it can move from one area of law into another. And kind of the choice to go with a donation-based model, but even that model is interesting legally because it's tradable donation. So it's tradable donation coupons. Because if you donate early and then you exchange the donation back out of the donation pool later, your coupons would have appreciated. But all of the money, you don't have any rights to the project, and and all of the funding goes directly to fund the real research project. I think we're at the beginning here of defining what these new legal systems can look like, so that's extremely exciting. It's also very challenging for anyone really trying to work with real-life assets at this point. Quite a few really interesting projects that I've been following for a while have opted to go initially with bonding curves purely with a membership model. So like you buy into this bonding curve and as an early contributor, and basically it gives you membership rights, and those membership rights appreciate. So a lot of them are pure governance plays, trying to really tie that to data or like to real world assets like data. I mean, even saying that data is a real world asset is a stretch in that sense.
So I think something that's cool as well, like I mean, so there's a lot of theorizing around bonding curves. There's a lot of people beginning to experiment with them, but part of the I guess one of the primary reasons that we're moving forward with this alpha, and particularly for a really cool use case, in my opinion, is just so like we don't know how people are going to behave with these things. We don't know how people are going to act. We don't know how people can take advantage of bonding curves. We don't know there's so much that's unexplored right now that I think will ultimately come out when these things are sort of put into practical sort of practice, when people can actually interact with them for real, in a real world situation that actually has meaning and translates to something. And yeah, in my mind, there's not necessarily for us, it was a conversation of like, what can we do that's really cool with this technology now, before having an asset at the core markets. And funding basic research seems like always a super worthwhile thing that's really interesting, getting people excited about projects, and then having an opportunity to see how people behave and interact with these things. And I personally feel that like, the crowdfunding for science thing is a tough egg to crack, and people have been trying to crack it for a little while. And from the research that we've done in the communities that we've engaged, the primary issue with it, and the reason that it hasn't been hugely successful so far as something that has, let's say, challenged the conventional grant system, is that the onus is primarily on the researcher to convince people. It's like you have to go out as a researcher and still fundraise, just from person to person individually. So the question for us is, and I feel that if we can crack this nut, it would be extremely, like it could be huge, is it possible with this technology to create additional incentives beyond just, yeah, it's a nice thing to do and it's altruistic? Is there some way to, either through a lottery system or through some potential of even a marginal return by doing this and playing it a certain way, sort of taking advantage of the trading behavior of people in the crypto space? Is there some way to do that, to create incentives and leverage that to fund research? And I think if we could be successful at that, in and of itself would be huge. And that's really where this technology is powerful. There's so many underexplored, underutilized, there are so many applications that we haven't foreseen and things that we haven't thought of yet that I think are going to come out once people really begin using them and data starts to accumulate on how people behave when they use these things. So yeah, we're super excited, and I think it's going to be, I think it's a really huge moment for us, but also for, there's a lot of people outside of Molecule that are interested in bonding curves. So I think for the blockchain space in general, this is going to be, in my mind, a pretty significant contribution to that field.
All right, thank you so much for taking the time for the call. If there's any other questions as well from anyone else in the channel, you're welcome to unmute yourselves as well and ask away. I think it's very, very exciting that we're working towards a launch now in September, and I think over the next few weeks as well, what we're going to really be doing is looking for a lot of support from our community in terms of user feedback, giving us your opinions, but I'm going to be reaching out as well to everyone via Telegram and individually. And if you are interested in seeing maybe a version of the demo and really helping us out, I think on the product side, we'd really be interested in getting some of your feedback depending on where your interests lie. And other than that, Molecule will be quite prominent in Berlin Blockchain Week in 2 weeks' time, and we're looking forward to catching up with you all there. And yeah, so thank you all so much for joining. Paul, Tyler, I don't know if either of you want to say anything to close up the call, but
Yep. Thanks everyone that came through. Yeah, and thanks for listening, and we hope to engage you more in the upcoming weeks.
all right, perfect. Thanks everyone.
Thanks so much for making the time, and yeah, super excited about the coming weeks.
Cheers, guys.
Bye.